And our other guest tonight is Greg Halloway. And Greg has 40 years making a living trading coins. And he is a world-renowned expert on rare gold trading. And he's also one of the founders of the world's first electronic service for trading coins. Greg, thank you so much for staying up late in Europe tonight and being on the call with us.
Well, thank you very much for listening.
Greg, it's always interesting. We know that you travel all over Europe, and tell me, where are you at now, and where have you been in the last couple months?
Well, at the moment, I'm in France. I'm looking at an auction, and I've been pretty much to every country in Europe, in Western Europe, I should say, over the past year. So I've been traveling extensively, as you fully imagined.
In France and most of the European countries. Gentlemen, there's quite a loud echo from Greg. I don't know.
Excuse me, Greg, Gary. I think I just fixed that. I have Greg actually on his cell phone conferencing with me, and he was also coming through his computer microphone. So I just muted him, and I think we've got that taken care of. Greg, give me a 5 count, please. Greg Halloway.
1, 2, 3, 4, 5.
Okay, we fixed that. One other thing, I've just made you presenter, Greg Halloway. So if you could go ahead and show your screen right now.
And while we're waiting,
I already did that.
Okay. Okay. It's not coming through. And while we're waiting for Greg and Tom to figure that out, folks, if you could just open up your question box and just sign in by saying hello. Thank you, Bev and Leyland and Chris and Tina, for doing that already.
Okay, Greg Holloway, if you could just try that again, go to where it says show screen and click that again.
I already did, and I've got it on full screen with it up in front of me.
Right. But we're not seeing it. So if you could just go do that again. Maybe it just didn't take.
There is no button to push, Tom. I'm sorry.
Are you seeing my screen where it says Investor Education Series?
One moment.
We're just seeing a blank screen showing that you're the presenter, but we're not seeing your slides.
Oh, now something happened.
Okay. Did you give me presenter control, Greg?
Yeah, I did. I've already done that.
Okay.
There's nothing else up on the screen.
Okay, let me just take it then. And we will have it up in a jiffy, folks. Okay. All right, folks, what we're going to do is we're going to start off with, I'm going to take the first few slides because we're going to be talking about a variety of different financial products, different ways that you can trade gold beyond the traditional ways. And then Greg's going to take over when we get to the more traditional ways of trading gold in the various types of traditional physical gold. Okay, Greg, can you just click your mouse anywhere in the PowerPoint there and then hit F5, please?
Okay.
All right.
There we go.
So, tech support, are we recording? Okay, excellent. All right, so how to trade gold. There are a variety of different ways of trading gold. And one of the first that a lot of people ask me about, I get phone calls all the time from people asking me, how can I take advantage of these huge moves that are taking place in gold? What can I do to capture some of the profits? And one of the things I get a lot of questions about are ETFs. If you're interested in learning more about ETFs, last Monday I did a whole class on nothing but ETFs. ETFs are exchange-traded funds. I won't spend a long time on that tonight. If you want to learn more about it, you can send an email to webinars@bellsouth.net, which email I'll give at the end of tonight, and just send an email requesting that particular class, and you can watch a whole hour of ETFs if you like. But ETFs are one way to trade gold. You can trade them just straight, or you can trade leveraged ETFs, where, in the case of the one that's showing on the screen, you can trade like double gold. In other words, if gold moves 3%, if you're trading a leveraged ETF, you can get double that, 200%, or make 6% if gold goes up. But of course, any kind of leverage is sort of like, the Bible refers to itself as a two-edged sword. Well, leverage is a two-edged sword, cuts both ways. If things go against you, you can lose twice as much as well. ETFs are not my favorite way of trading gold because, number one, I don't like anything very much where I'm not trading the actual physical, where I don't actually have the physical item in my hand, the physical gold. But also ETFs, as I mentioned in the webinar, don't necessarily give you exactly what they tell you. They tell you that we'll track bullion. But if you watch the gold ETFs, particularly GLD, which is the main one people trade, and do a comparison chart, put GLD up against the bullion, which is XGLD, the World Gold Index, you'll find that they don't track perfectly. And the reason for that is because the GLD is actually made up of other things besides bullion. I apologize, for some reason the part of my title has slipped off the screen there, but the title of this slide is Gold Mining Mutual Funds or Stocks. This is another way to trade gold, and it has its own kind of leverage. You see there a gold stock certificate for the big four, gold and copper mining, and can't read the last word there. But anyway, it's a mining stock, and of course there's mutual funds that specialize in gold mining stocks. You can find a mutual fund for just about anything you can imagine. There's some 27,300 mutual funds. I got this logo there for Barrick. Barrick Gold is a very popular stock that people like when they're wanting to trade gold mining stocks. If you're going to trade gold stocks, you really need to know what you're doing, because they will trade differently from gold. In other words, sometimes you can get a real pop on those if gold's going up and you're trading a gold mining stock. Sometimes you'll get more of a move than gold does. But if you don't know your gold mining stocks, you could actually get less of a move than gold. So this is not for the amateur. Another way that people like to trade gold is, actually I mean to change two slides there, is with options. Stock options mainly, but there's other types of options. You can do options on futures. Another word for futures is commodities. We'll talk about those in a moment. But typically people will do options. Another word for options is puts and calls. A call is a sort of a bet that something is going to go up. and a put is a bet that it's going to go down. So you can bet on gold by buying a put or a call, depending on what direction you think it's going to go, on an index or on an individual stock or on a group of stocks. You can even buy puts and calls on ETFs. So it can get complicated because an ETF can be leveraged, and then you can leverage further by buying options. Again, options are not for the faint of heart, and they're not for people that don't have experience with them. If you look at the book that you're required to read, actually nobody reads it, but you're required to, if you have an options account. I do a class on options, and the book that you're supposed to read is scarier than Halloween. It's definitely there's a lot of risks in options. Options can also be used to reduce risk. You just have to know what you're doing. It's not something that you should jump into unless you have had training in it. And I always advise people paper trade it first. Don't just jump into trying to do options without some experience. And the best way to get experience is without risking real money. Use paper traded money. Okay, and then there's digital gold. There's a lot of talk these days about trading gold just digitally. This is something I would strongly recommend against. Mainly because you don't know who you're buying from. On the internet, you could be looking at somebody that looks like a company that you could trust. They can put up a nice warm and fuzzy website, but you could be dealing with the Russian mafia. I mean, they could put up a website that has an address in middle Ohio, but how hard is it to put up a website? You don't know that company really is in that location. All you know is that somebody somewhere has put up a website, and you could be doing business with somebody that all they do is just take your gold, take your credit card, run it, and then they give you a digital certificate saying that you have gold.
Yeah.
Don't even go there.
The designer for one of my websites is based in, or was based in Ukraine, and he was doing everything from there, full control, but it was in both Canada and the USA, so you're right.
Mm-hmm. Okay, now the last one, well actually the next to the last one, is gold certificates. Now these are actually legitimate. Like the one I used here is the Perth Mint because that's the most, the best known. And are you changing the slides, Greg? Because we just changed slides and I did not.
No, are you running the you're running the screen, correct?
Yes, but the slide just changed and I didn't change it. So for right now, until I get done, just don't touch your keyboard, okay?
Okay.
The Perth Mint actually sells gold and keeps it in their vaults. And a lot of people do this. They like it because Australia is considered to be a good, stable government, and they'll issue a certificate showing that you own X number of ounces, or if you're wealthy, kilos or whatever of gold. And this is, pretty stable and secure. My one problem with this whole concept is the main reason why people want to hold gold is for protection against inflation. Some people do it for other reasons. Some people consider gold an investment. I don't consider gold bullion an investment. You've heard me talk about this many times. Gold bullion tends to just track the price of inflation, and so to me, an investment is something that goes up in value, not just in price. And while gold bullion does go up in price, it over time does not tend to go up in value. It just maintains the value of your purchasing power. So if I'm wanting to hold gold to protect myself against inflation, and because I think that there's a possibility of severe inflation or even hyperinflation, do I want my gold, my protection, to be halfway around the world where I can't have access to it? Yes, I can redeem that certificate and ask the Perth Mint to ship that gold to me at any time, but if there's hyperinflation and dislocation, would they be able to? In other words, would normal commerce be going on in that kind of situation? So for myself, I'm not a big fan of gold certificates for that purpose. And finally, a way that a lot of people trade gold is with futures. Now this, of course, is not for investment purposes. This is short-term trading. And if you're someone that likes to just speculate on short-term moves in gold, futures is one way to do it. And when I say short-term, I mean it can be minutes or hours or days. It could also be weeks, or you could hold longer-term futures positions. But futures are contracts for future delivery. In other words, I could enter into a contract for delivery of 120 ounces of gold for December delivery, and I would speculate on the price that I think gold would be next December or next October, whatever it might end to be. And if I'm right, and gold is at that price or higher, and I had a long contract, then I make money on it. And if I'm wrong and it's lower, then I lose money. So it's futures tend to be, they are a speculative thing. You can use them to hedge positions, but that's a little beyond the scope of what we're talking about. We're just trying to give you an overview of different ways that you can trade gold. And for short-term trading, this would be one vehicle. And now I will turn the controls over to Greg, Mr. Halloway, who is an expert on all things to do with physical gold and gold coins. He's been doing this for 40 years, and he is far more highly qualified than I to talk about the rest of the story, as Paul Harvey would say.
Well, thank you, Tom, for taking the first part of this, because I'm not an expert on the paper aspects of gold. To me, that's an oxymoron. It's either gold or you're not really owning gold. By having a piece of paper that says you own gold, it's, in my opinion, is defeating the purpose of the reason why people do want to hold gold. But we're not merely talking tonight about ways to hold gold. We're talking about ways to trade gold. And by trade, I mean buy and sell it and make money. So there are two things taking place in our world. One, all over the world, central banks are printing currency at record rates. We've never seen anything like this in world history. And Tom and I had an interesting debate by email with a sharp individual last week who was discussing this subject, and sort of took Tom to task for making a statement that he believes you can virtually guarantee that gold is going up, saying, well, nobody can guarantee the future. And I came back and said, well, I beg to differ, because the United States government has already said that they're going to double our national debt during the decade that we're in right now. So for that reason, we definitely know gold is going higher, because the higher the debt goes, the higher gold goes, because they go in tandem. So this is one of the perhaps only investments where we know for certain it's going up because of what the government has told us they're going to do. So in a way, we can absolutely, with crystal clear vision, predict the future of what's going to take place. So knowing that gold is going up is great, but how about a way to make even more money? Well, tonight we're going to talk a bit about coins. You can switch slide. And in order to explain to you how to make money with the coins, I need to give you a bit of background on it first.
You have the control, Greg. Just do your page down.
Oh, I can move it now? Okay. So we can have ingots, bars and ingots. We can have bullion coins. Most people are probably familiar with the Krugerrand or the Canadian maple leaf or the panda. All good bullion pieces that are readily tradable in the world and have a good market demand for them. But I'm going to talk to you tonight about United States gold coins because they offer a unique trading option that only a handful of people in the world are familiar with. So tonight I'm going to give you some insight into a trading technique that only a small few people know about, basically the insiders in the world, and the number of people who know about this is in the hundreds, not in the millions or hundreds of thousands or even thousands. There's only hundreds of people who are aware of what I'm going to tell you tonight, so you'll truly be among an elite group of insiders who are aware of a trading technique that is time-tested and proven to make money. So what are U.S. coins anyway? The United States was founded on gold. That might be surprising for some people to know, but for a history of approximately 150 years, the United States was on the gold standard, and all currency was spelled out by the U.S. Congress when it was first formed back in the late 1700s as to approximately $20 per ounce for gold. So a $20 coins are the largest denomination that the United States regularly made, and they have 0.9675 of an ounce of pure gold in them, essentially an ounce of gold. So there are two types of $20 gold pieces that were made. The first type is the Liberty Head. It was made from 1849 until 1904. The second type of $20 gold piece is the U.S. St. Gaudens design. Now this was first made in 1907 by the desire of President Theodore Roosevelt. He wanted to beautify American coinage, and he thought the earlier design you just saw was boring, and he hired Augustus St. Gaudens, the premier sculptor of his day, to redesign the $20 gold piece. This was made all the way up until 1933, when it was discontinued by, ironically, Theodore Roosevelt's cousin, Franklin Roosevelt, who took us off the gold standard. So Theodore Roosevelt created this coin. Franklin Roosevelt ended it. Now, another interesting fact about the United States $20 gold piece, it is the flagship coin of the United States, the largest one ever made, and it's bookended by two major rarities, the 1849 and 1933. There's only one known on each end of the $20 gold piece series, and they're both worth over $10 million for a single coin. So that's a little bit of a background on United States gold coins, but I need to give you more information to thoroughly understand what's available. In order to trade like an insider, you've got to understand the history of the modernization of the U.S. coin market. First, we'll begin with the information age and rare coins. In the 1950s, we had a simple 4-point scale to grade coins. It was called good, fine, extra fine, and uncirculated. These grading points described varying degrees of wear of a coin, and an annual price guide was the only source of information to tell us what these coins were worth. You're looking from a coin catalog from the 1950s, and you can see a $20 gold piece had a value of only $40-some in fine and $60-some in uncirculated. So they had very little value back in the 1950s because the dollar hadn't been inflated to the point it has been today. And so $50 back in the 1950s was serious money. Today, it just fills up your gas tank if you're lucky. In the 1960s, the first nationwide information system was created in the dawn of the information age. What this did was you're looking at a clunky old teletype system that was considered high-tech in the 1960s, and this machine was about as big as a dining room table and as noisy as a guy with a jackhammer out tearing up your street. So it was so noisy, I had to put mine in the basement of our office and have sound insulating panels put around it, and even then I could feel the thing rattling as I was trying to work. And how it worked was that I would feed in a message with my specific call letters that identified my coin company, and I would put in a message saying I wanted to buy a specific type of coin or I wanted to sell a specific type of coin. And this information was then fed through the system in intervals of time. About every half an hour the message would be printed through, and dealers all around the nation would be seeing those messages, and we'd have huge rolls of paper that would spill out all over the floor in a prehistoric type of information system, and I would spend literally hours rolling through literally miles of paper reading the information on there, trying to determine what the coin market is. So that was a great start. In 1963, the first weekly price guide was invented. It was called the Coin Dealer Newsletter. And it's been printed every week since 1963 faithfully. So we're coming up on 50 years that it's been printed. And what it would do is it would list a dealer's bid-ask spreads. I'm sure you're all familiar with what a bid and an ask is. Now, these were wholesale spreads between dealers, the same way that stocks and bonds have a bid and ask by market makers. And here's some bid and asks on a few different types of coins, some bid and asks and some other types of coins. And it's a lengthy publication. It's about 16 pages long with loads of piece of information on different types of coins, including the $20 gold piece. Into the 1980s, mega rare coin conventions started to pop up. Prior to that time, they were relatively small to medium-sized events, but in the 80s, they really started getting big. Now, to give you an idea, in the United States, there's over 1,000 coin shows every year. If some parts of the nation, there's so many of them that they're 2 and 3 every week. Believe it or not, the state with the most number of coin shows that I'm aware of is Michigan and Ohio. There are just loads of them there. I guess, you know, being a good collector base, being in a northern state where it's cold a lot seems to help. As ironically, there are very few coin shows in Texas. Now, here is a scene from a large convention. The biggest ones get up to about 800 dealer booths set up and about attendance of 20,000 people. And there's upwards of 10 shows a year of that size throughout the United States. They're also quite large in Europe, too. And Greg Gary was mentioning that I'm over here traveling to coin shows in Europe. There's quite a few of them here as well. In 1986, perhaps one of the biggest breakthroughs in the history of the modernization of coins took place with the invention of the first third-party independent grading an authentication service, a service that would authenticate a coin as to whether it was genuine or counterfeit, and would also attribute what the grade is. There's a lot of counterfeit gold coins floating around. I'm an expert in counterfeit detection and also a co-founder of the certification service and an original grader of it too. So I know how to authenticate coins, and there are plenty of fakes floating around. So this was a very worthwhile system to have invented. Now, what is grading anyway? There's a 70-point grading scale. 1 is the worst and is so damaged and worn out that it's barely identifiable, and 70 is absolutely perfect. That Tom got the smiley face and the sad face reversed there, but 70 is the absolute best. That is perfect in every way, shape, and form. Now, here's an example of a fairly low-grade coin. On the 1 to 70 scale, it's only a grade of 15. You can see there in the middle there, it's a grade of 15. And this has been certified by the Professional Coin Grading Service, which revolutionized coin certification. And you can see it's fairly well worn. A lot of the detail is missing here. I'm going to flip back a bunch of slides here for a minute until I come to the same coin in gem condition so you can see what I'm talking about. I should have had these side by side now that I think about it. Okay, there we are. You can see this is the same coin in a very high grade state where you can see the detail. The word Liberty here is full and all the little curls are full, and you have what we call mint luster. Do you see that shine all the way around? That's not something that can be duplicated from polishing. Lots of people think that they can polish their coins and make them more desirable, and instead they ruin them. So if anybody here has coins and are thinking, gee, I'm going to make mine nice and shiny, don't do it because you'll ruin them. The reason is that this mint luster is created through the striking process of the mint, and it's a crystalline structure that takes place in the metal, and it cannot be duplicated except through the high pressure that's applied through the minting process. Once it's gone, and there's nothing you can do to bring it back, absolutely nothing. All you can do is ruin it. So you either have that or you don't. Now we'll go back up here again to my example of the low-grade coin so you can understand what grading is. And you see again here how much worse this one is. The Liberty is virtually gone here, and you see this is all this wear in this part of the coin where all the lines are gone, the curls are pretty much worn out, and the face is worn down quite a bit. And you see there's no mint luster anywhere on the coin whatsoever. It's completely worn off. Okay, now we're going to go to the top of the scale. This is a 69, 1 out of 70. This is a 69, so it's only 1 point away from perfect. This is a coin that happens to be worth $5 million, so they do get valuable in tremendous condition. And this has all its luster intact, and you see there's this is not the best photograph, ladies and gentlemen, so you have to bear with me, but there's not a blemish on this. They probably could have called it 70 and not gotten any objections. So this is you're looking at the best known $20 gold piece. Of all 174 million United States $20 gold pieces were made, this is the finest known of any year that was ever made. That's why it's worth $5 million. There's not a single other $20 gold piece that's been certified that's this high grade. Now, this is the website for the Professional Coin Grading Service, and as you can see, they've certified 17 million coins so far with a value of $18 billion. So when we all started PCGS years ago, nobody would have ever imagined that it would have this kind of tremendous success, and today would have certified $18 billion worth of coins. I emphasize that number so that people understand this is not some backwoods hobby any longer. This is a huge business today. Collecting, trading, and investing in rare coins, especially gold coins, is big business today. Billions of dollars trade hands in coins every year, billions. Soon after PCGS was invented, a competing grading service was invented called the Numismatic Guarantee Corporation. And today it's the world's largest third-party service, having actually eclipsed PCGS by certifying even more coins than PCGS. Between the two of them, they've certified about $35 billion worth of rare coins. Now, continue on with the history of the modernization of the market. I've been explaining how the grading scale and how important that is. The higher the grade, the more valuable it is. In 1987, the first electronic trading system was invented for coins. This is a system very similar to NASDAQ. It's called the Certified Coin Exchange, and you're looking at a sample page, one of hundreds of pages on the Certified Coin Exchange, and it has coins. This particular one is a $2.50 Indian head gold piece, and here are different grades: 60, 61, 2, 3, 4, 5, 6, and 7. Remember, it's a 1 to 70 point scale. And on the top half of the screen, you have all the bids and all the asks. Now, how this works is this is the high bid, and then these are the back bids behind it. Now, if you look across here, you'll see this is the high bid for 60 of $230, and this bidder will take 5 pieces. That's what that number means. And the grading service he wants is PCGS. This guy will take NGC right here, and those are his call letters. Down here we have the ask. As you can see, there's not much of a difference between bid and ask, kind of similar to what you might expect in a stock or bond. And here the person asking tells you how many that he has available to sell, and you can click on either these bids or asks and execute a trade right over the computer. Now, this is strictly a dealer system. The public is blocked from access. So if you want more information about this, you can email or call me, and I can explain to you in more detail how that works. Now, how can you profit from trading U.S. gold coins? There's a very interesting element to U.S. gold coins that I introduced this whole conversation about, and that is the aspect of trading it that only a few insiders are aware of it. Now, I'm going to pause here for a while to explain what the opportunity is. Gold coins made by the United States are worth more than their gold content. That shouldn't come as any surprise because they were made in limited quantities, and the last one was made in 1933. Now, we've talked about Krugerrands and Maple Leafs, and even the American government now is making eagles, American gold eagles. What's the difference between those and the coins we've just been talking about? The difference is that they're made in unlimited quantities, and they're made continually on an ongoing basis year after year after year. So the American $20 gold piece is now an obsolete rare coin that hasn't been made since 1933. Now, to understand the history of the modernization of the coin market is important because that will help you understand the opportunity. The premium, what is premium? Well, premium is the rarity value that is assessed to the coin. A $20 gold piece is essentially an ounce of gold. Okay, let's use round numbers. Gold, let's say gold is $1,000 an ounce. It's more than that, but I'm just going to use $1,000 as a round number. So if the $20 gold piece is worth $1,200 on the open market on a wholesale basis, that would mean that it had a premium of 20%. The rarity premium would be 20%. Now, that premium is volatile. Sometimes it can be 10%, sometimes it can be 20%, sometimes it can be 30, 40, sometimes it can be 50, sometimes it can be 100%. The premium jumps around quite a bit. So there's opportunity to make not just token amounts of money, but major amounts of money, not just thousands, not tens of thousands, but many millions of dollars if you understand this premium volatility and how to take advantage of it. Now, what causes premium volatility? Well, the most simple explanation is this. A certain percentage of people who want to buy gold will end up buying the obsolete gold coins. Whenever there's a sudden increase in demand for gold, people will seek out ways in which to buy it. So what they'll do is they'll open up their yellow pages or go on the computer and look for a coin company nearby, and they'll say, I want to buy some gold. And they'll say, well, okay, well, we have gold here. Just come on in. Here are ours. And somebody will go into the store and look around, and some small percentage of the people wanting to buy gold will see some of these beautiful $20 gold pieces and say, you know, I'd like to have some of those also. So whenever there's a sudden run-up in the price of gold, there's a sudden increase in people going into coin stores, and then a sudden increase in the demand to buy $20 gold pieces. As a result of that, because the supply of $20 gold pieces is fixed and can never go up, whereas the supply of Krugrands goes up every day because they mint more every day, it has any increase in demand has a disproportionate effect on the market on U.S. $20 gold pieces. So the premium starts to rise rapidly whenever this happens. When the price of gold starts to stabilize or even back off a bit, then that premium will start to erode and go back down again. This is an endless cycle that is repeated year in and year out, and it's been going on for decades. So as a result, the premium is constantly going up and down like a yo-yo. But if you understand what causes this premium volatility, because as I just explained it to you, then you're ahead of the game by millions of people. Millions of people are completely unaware of what I've just told you. So whenever the price of gold starts to make a run, the premium also makes a run. So there you're getting it coming and going. So the premium on a $20 gold piece starts rising whenever the price of gold starts rising. So you get it both ways. At the moment, the premium is low because we've just had a 3-month pullback in the price of gold. Gold peaked in the middle of December at $1,220 an ounce. It's currently trading at, I believe, about $1,115 or $1,110, and so it's dropped back about 10%, and the premium has dropped on an average $20 gold piece from about 50% down to 15 or 20%, so it's had a pretty big drop. So today, the premium is at the low point of the cycle, giving you great opportunity. So should gold run back up again, $1,200, $1,300, the premium's going to start to widen again. Now, I personally feel that the price of gold is going to widen quite rapidly over the coming year or two, because even though we have no economic crises going on at the moment, our budget deficit for 2010 will be the largest in history. And this is a scary thought. In 1980, I worked as a campaign worker for Ronald Reagan because he campaigned on a platform to get rid of the national debt. And it was such a fear that our national debt was so out of control that people called it the Reagan Revolution when he was swept into office. And he campaigned against Jimmy Carter, claiming that his high inflation and high unemployment labeled it the misery index. Now, if you go back to that time, you think, well, that sounds pretty scary. Well, the national debt stood, are you ready for this, $900 billion in 1980, when Reagan was running for office. Today, it stands at $12.5 trillion, so 13 times the level it was Reagan ran for office. And this year alone, we're going to have a budget deficit of $1.6 trillion, or nearly double what the total national debt was in 1980. So I think that the Americans are the equivalent of a lot of frogs sitting in pots of boiling water. That you've heard the whole story that you put a frog into a pot of boiling water, it immediately jump out. But you put one in a warm pot and slowly turn up the heat, and it'll just fry to death. So that's what's happening. I can't get over the complacency of Americans that are allowing this type of run-up on our national debt to the point where we thought it was a disaster or that we needed a revolution in 1980, and today we accept it complacently as ordinary business that we're going to have a deficit this year of $1.6 trillion, and our government is projecting deficits of $1 trillion or more for every year for the rest of the decade. No end in sight, even when the economy gets back on track. So I believe gold's going up, and as a result, the premium's going to go up. So it represents a great opportunity. Now, you can trade this premium in and out at will. U.S. $20 gold pieces, as I've just explained to you, are very liquid. They trade sight unseen over these computer trading systems. They're just as liquid as any other form of gold in the world. So why not own them? Well, the reason is that few people know how to do this. They don't know how to track the premium, don't know what signs to look for that's causing the volatility, and they don't know how to take advantage of that. Well, tomorrow night, I'm going to be doing a regular weekly seminar that I do, and I'll offer some more in-depth information on how to actually go about the execution of trades, both to buy and sell U.S. gold coins. We don't have enough time tonight to get into that level of detail. I've given you a brief overview and hopefully opened your eyes to an opportunity that you weren't aware of before, that the insiders make millions of dollars on a regular basis, day in and day out, taking advantage of this constant volatility in the premium on $20 gold pieces. So perhaps I should let Tom step in and offer any other comments, or maybe open up for questions.
Okay.
Tom, are you there?
I am indeed.
Good.
Thank you, Rick. That was a really great webinar. I heard some things tonight that I've not heard before, and I've heard you speak many times.
I was going to say the same thing. You just keep getting clearer and clearer, Greg. Thank you.
Well, thank you both.
Well, on the screen right now, we have the email address, webinars@bellsouth.net, and we always try to put that up there because if you want to receive copies of any of these webinars, they're usually posted within a few days, usually a week to be safe, of the time that we do the webinar. And if you miss one, this is the place to get it. And also, if you'd like to be put on the list to hear Greg on Tuesday nights, he, of course, tonight he actually went to bed and got back up because 8 o'clock for him is 2 o'clock in the morning. So that's why he doesn't do our webinars very often. He's 6 hours ahead of us there. So his webinars that he does normally every Tuesday night are at 6 o'clock Eastern Time, and those of you in California, it's 3 o'clock and so on. But for him, it's midnight. So every Tuesday night, he does webinars specifically about gold. Our Monday webinars are kind of eclectic about a variety of different economic subjects, as you people that attend them regularly know. But if you would like to be on the list to attend Greg's webinars, I can put you on his list. And each Monday night, you'll receive an email letting you know what his subject is going to be. And all you have to do is click to join. And he's already told you what he's going to be talking about tomorrow night. But if you'd like to join that list, you can just get on when you'd like, just as you do on the Monday night call, so you can find out what it's going to be about and join if you wish. So,
so Greg, just to be clear, sorry, Tom, did I cut you off?
No, not at all. Go ahead.
Yeah. Greg, so you said that those listening to this were in the order of hundreds knowing about this. So tonight you told us about it, and do I understand correctly, Tuesday night you're going to tell us, you're going to explain it at a deeper level, but also there's an offering of how to participate. Is that correct?
Yeah, I'm going to explain it in a more detailed level, just as you explained, and explain how to actually carry out the trades.
Understood. Okay. Greg, you know that one $5 million coin you showed reminded me of Tom, because you said it was 1 point short of perfection.
Right.
Greg is the president of my Canadian fan club. Greg Gary is.
Sorry about that, folks.
Oh, my. Robert says he just lost his appetite. Well, obviously, many of you know how to use the question area, so if you'd like to use it for asking questions or making comments, let's do that now. We have about 5 minutes left, so please do that. I'm sure you'd like to take the opportunity. You've got one of the top 5 or 6 experts in the world on the subject of rare gold coins and trading of gold and so on, and let's take advantage of it. Ask him any question you'd like. First of all, on the subject we've been on tonight, as we always try to do, ask questions on the subject line. But if you have questions on other areas, I'm sure Greg will take those as well.
Greg, I have a quick question. In the 50s, it was a 4-point grading system, and then it went to 70 points. Was that something that transitioned over time, or did the group get together and say, all right, we're gonna divide it up by 70 points? How did that happen?
Well, it went from 4 and then expanded to 6, 8, and then it finally went up to 70. And the system that was invented, the 70-point scale was actually invented in the 40s, but it wasn't automatically received and didn't start to become used until the 70s.
Understood.
Until the 1970s.
Right. Okay. Susan says that she's anxious to hear tomorrow's call.
Okay. Well, I'm anxious to let you listen to it.
Good. Well, folks, I don't see any other questions coming up tonight. Tom, do you have any more questions?
No.
Comments?
I actually had a question earlier, and I'm racking my brain trying to think of it. I was just listening as Greg's going along, and something occurred to me. I should have written it down. I always tell other people to do that. I should have done it myself.
Okay.
I guess I'll ask it tomorrow night.
Yeah, good. Well, Greg, thank you so much once again for getting up out of bed in France. And
yeah, I only rested a few minutes as it turned out. So
okay, all right.
But I'm fine, and I look forward to any of you who'd like to listen tomorrow. As I said, I'll get into greater detail of how you actually make these trades and how you can keep compounding your profits by taking advantage of the fluctuations in the premium. If you're smart, you can take a position of 100 ounces of gold that's stagnant and double it over a period of time and have little to zero risk of ever going backwards. So I'll get into greater detail tomorrow as to how all that's done and look forward to having a further discussion with anybody who'd like to listen.
Very good.
Okay, so for
the
call tomorrow,
if you cannot come on tomorrow and this subject was of interest to you, just email Tom at the website there, and if you want to request a personal consultation or whatever, a recording, that would be possible also.
Very good. Okay, and just a reminder to everybody that past recordings and other information can be found on christianfinancialconcepts.com. Tom, great to talk to you tonight.
Well, thank you. Thank you for hosting tonight. As always, we appreciate it. And, good night, everyone, and Lord bless you.
Good night, everybody. God bless you.
Nice.
Good night, Greg.
Night.